Hello, folks. It's 8:01 a.m. Chicago time on Tuesday, the 20th of February. We're two-thirds through the month here. A little more than two-thirds. It is Tuesday again, February 20th. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning is pulling back a little bit versus where we finished on Friday. Friday's close was 2734.5 in the S&P. And we're trading currently at 2717. We're off by about 17 points this morning on the benchmark index. The leaders this morning, the U.S. dollar, RBOB, gasoline, a little bit on crude. Crude trading, again, crude is in April. The front month is April, the J contract. Trading at 61.66, up 10 cents. Gold is the laggard today, trading at $1,339.1, down down 1.27%. So overall, allocation is mixed. Not seeing, the Treasury bond is slightly down from settlement. The 10-year is slightly down. It's down 8.5 ticks from settlement. So overall, the market is pulling money out. That's the stance we have. We sold off yesterday on the holiday session. It was a holiday here in the U.S., the President's Day. We sold off, and then we rallied back up, and then we sold off a little bit into the middle. That session has been removed from my chart, so you won't see it here today. It just has no basis other than to trade in sympathy with the markets that are open. Last week's high was Friday's high, so Friday pushed the high of the week at 2754.75 in the ES. And again, we're trading pretty far below that right now. About 37 points or something. So let's take a look. Let's jump right in and look at what we did. There was no trader bite on Friday. Had some issues with my chart, so there was nothing for me to show you. And it's we finished fairly strong on a neutral extreme day on Thursday. So the expectation on Friday was for it to continue higher into 2750 being the century figure, and a major strike. Friday being the monthly expiration in the contract. So expected some rotation up there at 2750. It went to 54.75. It pushed almost by 5 points, and then came off and came back into the initial balance. A normal variation day with the point of control finishing at 2740.50. So that's where we were. Now, overall, bigger picture, what have we done? Here's what we've done. So bigger picture, we started selling off on the 2nd, the Friday. We continued selling off into the 5th on the Monday. Pretty high volatility day. The VIX really pushed some extreme highs. And then we had a resting day the following day. We popped back up, and then we had a continuation trade down into the following Friday. And then we put in basically what looks like a V-bottom, and the market's trending up. And so far, we've taken back some key areas, and we've taken back about 50% of the swing down has been taken out. So to me, the shorts are likely to run for the hills here. we're forming the formation we have here is, or the type of trade that we have here is that we are pushing all the way through the sell-off day's profile. We're pulling back a little bit today, but last week we were one time framing up on the daily from Friday. Sorry about the pauses there. So as we push forward and we look at this profile, we're filling in the profile at the top. As you see in the left there, on the left in yellow, right here, you see us continuously filling in. So if we go back just to get an idea of what has happened here, if we go back and look at what has happened since the bottom, we've had a point of control at 26.43, and we had a key LVN as marked on the flex levels around 37.31 or so. That was a key area, if you recall, last week for the market to take out in order to push the sellers out. And if you watch this profile on the left and how it fills in, it's very useful to me to see how the market's transitioning the auction. Okay, so as you see it here, it's continuing to fill above the point of control, above the point of control, above the point of control. It's filling in all the areas, all the thinner areas. See how it's starting to fill that in. That's how the auction's proceeding. And what's happening here is you see that volume pushing the microcomposite profile, the volume, the histogram on a microcomposite profile. What you're seeing there is acceptance, right? So here we are at the LVN. This is the LVN right here, low volume node, very important. That's the key LVN from the sell-off, and it pushes right through right here, pushes right through. Okay, there's a little pause, and then we start to fill in above there. Do we revisit? Yes, we do. We revisit in the afternoon and hold steady up there. And currently, see that LVN? That LVN here? Look at where it ends up after Friday. It is completely gone. And so, what the market's doing is it's bidding and accepting, bidding and accepting, bidding and accepting, bidding and accepting. So anybody that is short because they think the world's coming to an end is becoming a buyer at some point and is becoming a party to a defector and a party to the bidding and accepting portion. And that's just how the auction rolls. Now, is that predictable? Is that a predictable move by the market? Not necessarily. I want to remind everyone that we're not here to make predictions and to determine where the future is going to be far into the future. All we're doing is we're looking at what the stance is and what is likely to happen next, and it's a guess. Okay. Speaking to someone yesterday, just as a little example of that metaphor. If you are sitting across from someone having a drink or a meal, and what we do, what the fundamental analysts and the forecasters do is they study that person's mental health, their prior behavior, and what they've done over dinner in the past, and so on. What we do is we enjoy our meal until the person in front of you stands up, winds up for a punch, and then we act. So we don't act before that. It's just we are very responsive as traders. And so if a person is getting up and they're making a fist and they're pulling their arm back and they're looking you straight in the eyes, we know what it has done, how good of a job he's doing in winding up, what it's likely to do next, right? And, you know, what has he done? What is he trying to do? He's trying to swing at you. How good of a job is he doing? Well, he's standing up and I'm still sitting down or whatever. He's winding up pretty good. And then what is likely to happen next? You're likely to get punched, so you better get up, run away, duck, block, whatever. That's basically what we're doing. So we're not looking to forecast the future here. We're not CIA or some profiler for the FBI or whatever. That's not the business we're in. We're in to look at what it is right now, and that's really important for you to understand this process. You want to look at where it is now. You don't want to look at what that person should have done after they've clocked you straight on the nose. You don't want to figure out what you should have this and that. You just, or what, you know, you can't dwell on, I should have finished my meal, I was really enjoying my steak or whatever. You got to look at, okay, right here, right now, I need to do something. I need to take action. I need to bet on the guy punching or whatever. Anyway, silly little metaphor, or analogy. But it's that's basically where we are, right? So don't look at anything I'm talking about as forecasting, because it's not. When we're doing our scenarios, we're doing a short-term plan for what we expect things to look like once the market opens, so we can act on that information as soon as it appears, right? So in that situation, what we're doing is we're saying, if we're here to have a meal and it's a friendly meal, then we're going to enjoy our meal and we can see ourselves enjoying that meal. But if they start to punch, here I'm going to push my chair back. I'm going to take a defensive stance. I'm going to warn them. I'm going to be prepared to block, and I'm going to be prepared to punch back, right? So you're ready. It doesn't mean that you'll get punched, but you are ready for it. As opposed to someone who just shows up and is completely oblivious to all the scenarios that could happen. Almost like a spy, always checking to see which exits are available and so on. Doesn't mean you'll use them, but we're prepared for that. And that's really the bottom line here. As a trader, I'm simply being prepared as best as I can to what the market's likely to do. So that's where we are today. Anyway, that's a lot more than I wanted to say. And overall, the market is trading a little bit lower on the open. Okay, the overnight session. Let's look at that a minute. Let's turn all this stuff off here. And this stuff, it's noisy. The overnight session, I did erase everything that's happened on Sunday, even though today's session is actually Tuesday. From Sunday till today, through today, it is a Tuesday session. Whoa, seeing the market whip around a little bit here. There's some news. Market just dropped about 4.5 points real quick. You can see it here in Bookmap. Something to do with the Russian interference, election interference. Special Counsel Mueller announces charges against Alexander van der Zwan, son-in-law of Russian oligarch, for false statements. That's what just came out and is pushing the market around. So we basically have tested on the current overnight session. We tested Friday's close at 34.50, the high of 35, and then we start to sell off. We've started to sell off. We've touched the point of control left behind from 215. And we are below the mid. The profile looks like long liquidation, a B-shaped profile right here, long liquidation, and so it's below the mid, and so the expectation is this is likely to continue lower. Okay, and so that's where we are. Yeah, today I am a rambler, aren't I? All over the place. So let's cut this real quick. The plan for today. Is, let's look at the current session. The plan for today is to look for an initial push down into the overnight low. I'm looking for it to base around 2,700 for an impulse up, and I'm looking for responsive buying back into Friday's profile. That's where I'm looking. Okay, so that's the primary scenario. So I'm gonna let it go. I'm gonna step back and let it do what it's got to do on the open. I'm looking for it to get tangled here in Thursday's point of control in a heavy area, and I'm looking for it to base around 2,700 and for it to turn back up into Friday's profile. Okay, so with this Russian stuff going on, I have no idea what the impact is. The news that just came out, no idea. So we'll see how that plays out. But that's the primary trade for today. I'm looking for it to continue lower. The overnight inventory is short, is almost 100% short. But at some point, I'm looking for that to dissipate into 2,700, and then turn back up into the prior day's profile. That's primary scenario. Secondary scenario, we get an open auction out of range in balance, right, into these 2 days of trading. We're trading inside of these two Thursday, Friday. I expect an open auction, and then I'm looking for it to be responsive into the prior day's range. Now, here's the key. This could play either way. If we don't regain the prior day's range, Friday's range, and it falls back through the opening swing, then I'm looking to step on it and push the shorts through 2,700. That's the secondary scenario. Okay, and then the tertiary scenario is the same as this second scenario, except that it starts to regain the prior day's profile, in which case 2,740 becomes the target for scenario number 3. So this is a responsive scenario that tries to get into the prior day's range, and then if it doesn't get stepped on by sellers and pushed lower, I'd like to see them step on it, actually push it lower and into 2,700. And then if not, then I'm looking at it continues to hold the prior day's range, and in that case, I'm shooting for 2,740. I would likely to get stopped at that point because as soon as we get responsive here, I'm going to be looking to get short out of the range. And so that's likely to be a stop if it continues higher on scenario 3, and then I'm looking for the opportunity to push to 2,740, and that should compensate for that stop. That's what I'm looking at. So that's it. For those of you who are short on time, you can take off now. But for the rest of you, I just had a couple words to share with you about indecision, right? So a couple people have written to me and DM'd me, more than a couple, that said, I just all of a sudden I can't read the market. And what should I do? A lot of money was made during the volatility, and now I've given it all back. And I just want to remind you that as a trader, you don't have to trade. You're not a trade desk. You're not a fund. You don't have to trade every day. And so it is really important to step back, give yourself a chance to step back and just take it in, right? So it happens to me sometimes where I just can't tell what this thing's trying to do, and I just don't trade. It's not fun because I'm here. I feel like just like everybody else, just like all of us, I feel like, well, if I'm not here to trade, I'm wasting my time. But really what you're doing is you're saving money because if you can't feel it, and or you don't see the logic behind the auction, and you're stepping into the market and trying to scalp for ticks here and there, I can assure you that you're more likely than not to lose money in that situation. So step back, take the day off. Taking a day off for a trader does not mean you run off and do something. It just means sit in front of the market and just watch what it does. And what do you watch out for? You watch for how it rotates through areas, right? So how does it rotate through yesterday's high, which is a day time frame level, or how does it rotate through the prior day's auction? If it's disrespecting the prior day's auction, you know it's a higher time frame that's in action, and you start to zoom out and look at the composite, right? So if the market's not respecting the prior day's levels, then we're looking at the big picture. Now we're targeting 2680 down here as the MC point of control, the MCLVN, the key MCLVN, and so on and so forth. You just want to step aside and have a clear mind long enough without being negative in your account for that day to gain perspective. And that's really important. Also, you're going to want to watch what's going on with treasuries. Treasuries are the reason, in my opinion, that this market had that quick correction. As the treasuries push yield through 3%, the 10-year pushes yield through 3%, 3.05 especially. A lot of participants, a lot of fund managers are likely to make a move, and that's going to impact the S&P. So if you don't have a 10-year chart up, especially a yield chart, it may be time to put one up and just keep an eye on it, just out of interest. Good luck.